Welcome to PlotLines, where we'll use our over 30 years of experience in real estate communications to uncover the real stories behind real estate. I'm Heather Crowell.
And I'm Brittany Acriveau. Dive in with us as we invite guests to break down the ever-changing landscapes of real estate together. Welcome back to PlotLines. Today we have Mike Petrakis, the founder and CEO of PowerPay. Mike, thanks for joining us.
Hey, great to be here.
Yeah. All right. Well, let's dive right in. Tell us a little bit about your background and how you came to found PowerPay.
Yeah, so it's an interesting story. PowerPay is a fintech. We're one of the largest home improvement lenders in the country now, and we're arguably the largest funder of hearing aids in the country as well. But the journey isn't sort of a straight path. But back in the day, I was a really large contractor selling home improvements, and we were selling a payment back in the day using a fintech, few of them, and we found that they were expensive to use, really inefficient at point of sale, and we decided to set out on the build with one of our OEMs, who eventually decided that they were going to stick with the existing fintech and sold almost the channel partners out for a 1/4 point marketing incentive. So wow. It's been a unique, I think, experience for all of us. We started out with 2 people working out of a Whole Foods. Today we have hundreds of people working across the globe to help support the platform. We'll process $5 to $6 billion in home improvement this year alone. And it's a far cry from that single loan with one credit union that we had years ago. So it's, it's been a fun journey.
Yeah. Well, congratulations on that growth. That's so exciting.
For sure. And you didn't touch back on the hearing aid, so I'm a little curious about that. But I don't have any headlines on that topic either. So So our show, as you know, I think is all about rewriting headlines or unpacking the headlines, understanding what's really going on out there. So we've seen a lot of notable headlines recently about uptick in home improvement spending and this trend of homeowners staying in place. So what's your take on that? What are you seeing out in the marketplace? Is that true? If it is, what's your take on why that's the case?
Yeah, I think a lot of it started back in the pandemic where homeowners just couldn't leave, the homestead. Today, it's a little bit different because mortgage rates are still high. Only a few months ago, they were at 8%. This morning's rates are still north of 6%. So we're in that 6 to 7 range. And that's if you have pristine credit.
Sure.
Right.
So there's really no inventory. So what we found is that consumers are choosing to stay in their existing home and looking to reinvest in the home. So we're seeing things where back in the day it was always about need. Today it's more around, I want to improve my lifestyle. So I'm seeing, it went from, I need a new air conditioner to I have a leaky roof to today it's, I want to put in this glorious kitchen or bathroom.
That's
during those remodels, they're starting to bundle a lot of those together. So it's been it's been a shift, I think, in the market for the consumers, and I think it's going to be here for a while because until those rates drop, I think the consumers will have no choice. There's $34 trillion worth of equity tied up in that consumer's homestead right now.
Wow. Yeah, really, really interesting times until those rates continue to come down. But that's obviously good news for PowerPay, right? But tell us a little bit about, so you said it's kind of shifting from more of like a need to a want, but tell us maybe about any other misconceptions that are out there about like home remodeling and renovation.
Yeah, I think the one of the biggest ones is that whenever you call for a contractor to do work, most contractors will have some kind of finance partner, whether it's PowerPay or it's someone else.
Sure.
You don't, as a consumer, need to use that platform in order to fund those loans. There's this other misconception that it's expensive. We're way more expensive than going to your local bank, which isn't true. If you think about what we do, today we have our own balance sheet alone. We have $500 million to lend across the country. I have a syndicated warehouse that's led by KeyBank and Synovus Bank.
Okay.
They're super regionals. We just did a deal that closed the other day with one of the nation's largest banks. Mm-hmm. So when you start to look at that and couple that all with our ABS program, our securitization program allows us to provide really efficient forms of capital at point of sale. So all that means is it's a lot different than back in the day. Our parents used to just go to the local bank, right? You talk to your branch manager and you say, hey, I want to get a HELOC for a home improvement loan or some kind of improvement. Today, it's more around, we take a lot of aggregated data and we can be really quick at point of sale. So when you think about going to a bank and sitting in that bank for, half an hour to an hour, filling out a credit application and waiting weeks until you get a response, it's not that way anymore. We're embedded. They're really quick. When I say quick, milliseconds in decisioning, because we have all the data that the banks don't have access to.
Yeah.
And I think consumers really need to understand that banking today isn't what it used to be in years past.
Right.
Yeah. And I guess a follow-up question to that, Mike. So with construction costs rising and tariffs and all these things, are you finding that in addition to people just wanting to do more to their homes, are they also, seeking out that financing because now it's more expensive to do these projects? Like, are you seeing demand uptick on your side because of that as well?
Yeah, so we're not seeing that. So what we're seeing is demand is constantly increasing, right?
Yep.
But as it relates to tariffs, what we're seeing is that the suppliers have absorbed most of it right now, and that those costs have not been passed on to the consumer. But we think all of that is going to start to change because we're going to get into Q4. Q4 is a reporting period, right? Mm-hmm. So therefore, you're going to start to see some shifts, and those costs will be passed on to the consumer eventually. And it's our job to go out there and just try to be really creative in the way we're deploying products. So, when I'm talking to a consumer, obviously through the platform, and our team is out there, the goal here is to try to find them what is maybe the most affordable product, or maybe finding something in a promotion that they couldn't get somewhere else that allows them some front-end relief. But ultimately, I think we're just trying to make sure that these products remain affordable, because if they're affordable, we know that the consumer won't be burdened with maybe concern that if there is a loss of employment or there is a change in lifestyle, that they're not going to be able to afford these projects.
Okay. Makes sense.
That does make sense. Okay, so you sit in a pretty unique seat. I'm sure you see a lot of different uses of funds, from emergency repairs to renovations or expansions or kitchen renovation, bathroom renovation, pool addition. I'm talking about all the things I've done in my home over 15 years.
From experience, right?
But I'm sure you've also seen some interesting things. What's like the most unique use of PowerPay's funding that you've seen?
I don't know if it's unique. I think that what we see are these multi-stage products. I know I mentioned it before, where I'm going to get an exterior, a roof, and maybe a kitchen all rolled up into one project, right?
Okay.
But we are seeing, which is really interesting to me, the aging population is now making conscious decisions to not want to move out of their home, right?
Yep.
So what we're seeing is, I don't want to go to a nursing home. I don't want to go to a retirement community. And ultimately, I want to stay there. I want to improve and modernize my home so that I can live there, so that, my grandkids and my great-grandkids can experience the life that I built for my family, right? So I think, to me, if I can help do that, I mean, that is one of the most rewarding things that I can offer a borrower.
Yeah.
That's awesome.
And Mike, we know you work with a lot of major players in the home remodeling space. I mean, what are you hearing from them? Like, what's sort of keeping them up at night, or challenges or opportunities that they're seeing in the market?
I think the unknown right now that, we're on with tariffs, we're all off with tariffs, right? Knowing that it's really important to keep their labor force in place.
Sure.
And And if they go ahead, they don't want to have any disruption there because they'd rather carry them and deal with the extra expense if need be.
Yeah.
Because once you lose them, it's really hard to recover and retrain. So we're seeing a lot of that. We are not seeing, which is great. Back in 2001 and the early part of 2002, supply chain was really frozen. We're not seeing supply chain frozen right now, which is a good sign. So, and as long as things remain open, we think that there's going to be a lot of growth without all of them. Now, the larger providers are even expanding into new markets, which is very, very interesting. And it's helpful because from our perspective, we value these relationships. We invest a lot in these relationships. So if we can continue to grow with our partners, then there's going to be a lot of growth for the company moving forward.
Sure.
Okay. What, so as a consumer is out there seeking financing potentially, do you find that there's anything that they should be thinking about, or what do you wish more consumers knew or were thinking about? And then I'm going to tack on to that. How do they find, you talked a little bit about going to your bank or your credit union, and that's how sort of a lot of us grew up. How do they find alternative sources of financing that are maybe more efficient and more effective and more niche, right? More focused on the home improvement space. So I'm sure you have a website, but beyond that, what should they be thinking about, and why should they be thinking about, using another source of financing other than their traditional bank?
So it's a great question. The first part of the question is not all lenders are equal. Same thing with contractors. What I would really would be hopeful for is that the consumers do a lot more research before they actually go out to take on these projects. And all I mean by that is the home is the largest investment for most of the Americans, right?
Yep. Sure. Yep. Yeah.
I would think that you would go out, get pre-qualified. Why is it when we go to get a mortgage, we all go out, get pre-qualified, then we go shop for the home we can afford? Doesn't seem to be that way in our business. So
right.
I would say go out, make sure you're doing your homework on the lender, making sure you understand the products that can be afforded you. So here at PowerPay, what we have is we can offer you unsecured products. We can offer you promotional products that are unsecured. We have a PowerPay quick close HELOC. So when you start to look at all of these products and services that we offer, we can bundle all of that for a consumer before they even walk in the door. I can give you a pre-approval. And then you can go and take that pre-approval, take it to any number of those contractors. We have 15,000 contractors and providers in our network that have all been fully underwritten. So if you don't have a contractor that you've selected, ask our team, we'll go ahead and we'll distribute. But whether it's us or whether it's a bank that you're comfortable with or a credit union you're comfortable with, I would say do your homework.
Yeah.
That's the most important thing there. So.
Fair.
Yeah. Awesome.
Yeah.
You mentioned markets. I'm curious, are there any markets where you're seeing any unique trends or higher demand for renovations?
We're seeing a lot of exterior and kitchen remodels, kitchen and bath remodels right now. So, and I don't think it's, I don't think there's any mystery behind it. If you go to sell your home, right, you're going to be able to unlock a lot of that in value. So if I'm a consumer, I invest in those three verticals, and then it allows me to, when I go to sell the home, I'll be able to pull all of that out. So,
But what about, Mike,
regionally,
states, regionally, any markets that are standing out where you're seeing a lot more?
I think that there's no mystery either. The largest markets for us are California, Florida, Texas, Pennsylvania, because I think this is our backyard. So I didn't get a chance to mention, we are a Philadelphia story, born and raised, went to college in Philadelphia. So for me, being here, it's actually it's a pleasant surprise to be able to see that Pennsylvania is number 4 on our list.
Nice.
That's saying a lot considering the population demographic that's in those other markets.
Sure.
When you look at some place like Texas, really high net worth, that's situated in a really high dense population right now. It's younger. The younger demographic tends to want to use these fintech platforms because don't even think, even my daughter who just turned 21, I don't know that she's really ever been in a bank. and to ever be in a bank because she can deposit online.
Right. Do it from her phone.
Withdraw, with all of these other BNPLs and, and Venmo and PayPal and everything else that's out there. I think these digitized formats are good for the younger demographic, and they're great for these really diverse populations that span these larger states.
That makes sense. Yeah.
Yeah, for sure. So beyond that, this younger generation looking at digital solutions, what other trends are you seeing in terms of home improvement financing? Is there anything else out there that people should be thinking about? Any major shifts or that we haven't touched on? I feel like we have, but just, for our viewers, is there anything else?
Well, I think that the biggest thing that, all this talk around AI, right?
Yeah.
It will be thread into every aspect of our life moving forward. Today, we use it. We use it as a supplemental augmentation tool for our resources. So all that means is that we use a lot of data. And if you think about how quick we are, we use a lot of data to make decisions. And then we're using all of the AI tools to go ahead and help support the team. So AI is there to help support underwriting. There are real bodies that sit behind the platform, but AI will help there. AI will help our concierge team to determine maybe how to interact with that consumer.
Yeah. Okay.
We're using it on the compliance side. So we're reviewing loan documentations. We're using it on the secondary market distribution. So we talked about the securitization platform. We're taking all of that data, we plug it into the AI, and it tells us specifically what assets are to be delivered to 30 or 40 institutional investors around the world. But all of that combined with data is going to change the way we really think about lending and even from the consumer side, how I'm going to approach trying to acquire a loan or some kind of BNPL to finance my jeans. All of that is done through AI and big data.
Okay.
Yeah.
That makes sense. Yeah.
Well, and even beyond lending, I'm sure we've all seen now in our feeds, right? Everyone's using AI to redesign my living room or help me reimagine a kitchen, right? So in the home remodeling space in general, we're seeing a lot of AI usage.
And I'm sure the design build firms love it when you say, this is what I want.
Yeah, right. And it's a AI.
Right.
We just moved into a new office the other day and we used it for a lot of the design.
Did you? Yeah. That's awesome.
But it's great. It gives you a chance to see what it could look like and give you new ideas.
Yeah, it's pretty impressive, really.
Yeah.
All right, Mike. Well, you gave us so much to think about. I know we started the show asking you for your reaction on current headlines. So if you could write your own, what would that look like?
I think that, quite frankly, the future of lending isn't a loan. It's going to be a choice, right?
Okay.
These consumers have a lot of control, more control than they even know right now. And it is, I think it's really important for them to know that, be really selective with who your partners are going to be moving forward, and know that, you can go out and there is going to be a vast array of alternatives for you to make sure you're in the right type of product that is good for you and your family.
Yeah, really important. Okay. Is there anything we haven't covered that you think our viewers should know?
No, I think that you touched on all the main topics. We're really fortunate to be able to be here with you and tell our story and be able to spread the word about this digitized financing solutions that we offer.
Yeah. Well, thanks so much for joining us. We really enjoyed this conversation.
Yeah, it's been great. Thank you.
Thank you.
This podcast is a production of Gregory FCA. If you enjoyed our discussion, please subscribe wherever you listen to podcasts